Now, I've made thousands of dollars trading the market,
5 years of full experience,
and in this video I'm going to be giving you my 5 years of experience of what actually made me profitable,
all in one YouTube video.
Now, by the way, I've been trading since when I was 16, so I really got to make all the mistakes at that point, finally know what works,
and by the time you're done watching this, you'll have a solid understanding of things to do and what you should totally avoid in the market. Now, for context, it takes the average trader 1 to 3 years for him or her to become consistently profitable.
But with these 5 steps I'm about to share with you guys,
this will literally cut the learning process in half. So really, what are these steps?
Okay, so let's address the elephant in the room.
Now, the thing about trading is that it's simple, but it's not easy. For example, for you to make money in the market is as simple as pressing a buy or sell button. But seriously, the main thing is really just understanding the direction of the market.
Now, when you finally understand where the market is basically heading to,
it will be easy for you to know entries, exit points in the market,
and when you have that in your fingertips and you can consistently do that,
that right there is the definition of profitability. And that's why I'm going to be showing you this easy step that 100% shows you the direction of the market. Now, let's use for example trader A and trader B. Now, these two traders have different trading patterns. Now, trader B's style of trading is simple but is a little bit concerning. Now, trader B doesn't have a trading strategy. He just follows wherever the market is going, and whenever the market goes against him, he prays that it doesn't hit a stop loss. Meanwhile, trader A has a trading strategy, sets of rules that he used to get his entries and exits, and more importantly, he does actually follow them.
Now, I'm sure you've heard of the saying, if you fail to plan, you plan to fail.
And in trading, that's exactly the same thing.
And what I'm going to do for you guys right here is I'm going to give you guys a simple template you can use to build
a strategy that beats the market by 99%. By the way, thanks to Funded Trader Market for sponsoring this video, but more on that later.
Now, before we go ahead with all this, we really need to find out what makes a strategy so good.
Now, the reason why we're traders and we trade is simply to make money. And how do we make money in the market? Well, by buying whenever the market is in an uptrend and selling whenever the market is in a downtrend.
Now, at this point, we need to move away from what the direction of the market is to what is really causing the market to move in that direction.
Now, there are 3 major things that decides the market direction. Now, let's use for example the market is moving in an uptrend. Then all of a sudden, out of nowhere, the market just switch into a downtrend. Now, what do you think caused that? The only reasonable answer to that is actually support and resistance. Let me show you. Now, if you look right here, the market is in a downtrend. But when the market got in contact with this area, we could notice the trend changing.
Now, seriously, this is not a coincidence, because even after that, the market had to hit it 2 extra times.
And if you also use an example of the market going upwards and it hits a resistance, that beautiful uptrend will change into a downtrend. So this really shows that support and resistance affects the market. And one other thing that affects the market is time. Now, many people don't know this, but the time you're trading actually matters a lot. Like a lot.
Now, let me show you guys something real quick.
Now, remember, there are 3 major movements in the market, which is uptrend, downtrend, and consolidation. And the worst market movement is actually consolidation.
Now, if you look right here, there's like serious movement happening in the market,
and you can see how smooth the market is moving, not until it gets to this point. Then at a certain point, the market picks up back. Then it slows down again. Now, this same thing continues over and over again at a specific time.
Now, most of these things is actually caused by market sessions.
But the question now becomes, what is market session? Now, if you look at the world map, obviously the earth is round, so we can't have the same time.
Now, each and every single place has their time zone,
meaning it can be daytime in the States and nighttime in China.
But really, what does this mean? Now, let's use for example you going to work, right? Now, do you go to work in the daytime or in the nighttime? I'm sure your answer is going to be daytime.
Now, in the daytime, there's a lot of business activities that is going on, buying, selling, and all of this is what boosts the economy of a country. And in respect to the currency that they are using, all of these things reflect on the chart. Now, in the nighttime, the charts will look like this, and in the daytime, the charts will look like this. Now, none of these other currency matter except the major currency pairs. And what are the major currency pairs? Firstly, the United States dollar, which there is also the British pounds, and to the right, the Japanese yen, and for a place known for its wildlife, the Aussie dollar. Now, each of these places I mentioned is actually the 4 main trading sessions in the market. Now the funny thing about this is that these sessions are actually named from the popular cities in those countries. Like for example, New York session in the United States, the London session in the United Kingdom, Sydney in Australia, Tokyo in Japan, and all these places I mentioned is what actually makes the 4 main Forex market session. Now how this works is during the daytime of these cities, the currencies that these cities use are going to be having a lot more volatility, but during the nighttime there will be no volatility or no movement within these areas. And that's exactly why you want to know the time of these sessions in your own time. Now to simply do that, search on whatever browser you're on, Baby Pips Forex session, then click the first link you see on there, and right there you should see something like this. So it will give you the 4 sessions, the time when all of this is happening, and most importantly where the market is most active.
Now seriously, I've put you guys on and you can now start trading at the best time of the market. Now even though you have the best of the best strategy and you're trading in the worst time of the market, you're still going to lose money. So it's very important that you get that right.
Now you've known about support and resistance, you've also known about time, but there's something really small but very important. Now this appears on the chart unnoticed but plays a crucial role in deciding the market movement. Now I'm gonna go on the chart right now and try to see if you can spot what it is. The only clue I'm gonna give you is it's mostly in the areas where the market stops.
Let me get this brush tool right here. This right here is an example. The market is currently going up. This right here is an example. Also this one is also an example though. Then which other one? This is also an example. Let's see. Yeah, that's obvious. That makes it an example. Yeah, that makes it an example, and this is also an example. Now, have you been able to figure it out?
Now, in case you didn't know, I was actually showing you key level points in the market. Now the first question becomes, what are key levels? Now key level is simply an important price point in a market,
so that actually makes this key level area to act as both support and resistance.
Now this image right here explains it best. Now this is the key level point. Now remember what I said, a key level acts as both support and resistance, and if you look closely right here, that's exactly what is happening. Market acting as a resistance, and when it breaks it, that place turns into a support.
But seriously, it's just a key level.
Now key level can look so small or insignificant, but trust me, this is very important. Now key level helps you to get into entries of trends that are already happening. So if the market is in an uptrend and you find like a key level you can enter to get into that trade, you could basically do that. And also key levels can also give you your take profit points, because you know the market is going to react on those areas. And simply you can easily time your trades and know the best time to actually get in, which is really good.
Now seriously, I've given you guys the foundation that you can use to build a really good strategy.
Now best, if you find an indicator that can take care of each of these points I've mentioned personally, you're going to be good. Feel free, check through MT5, because every indicator that you need to find trends, support and resistance, even time is all there.
So now you've gotten a strategy. The next thing now is to start trading.
Now there are 2 ways you can go about this.
Now you can trade with your own personal funds, or you can easily just get funded.
Now trading your own personal funds is good, but it doesn't beat the scalability of what you get with a funded account.
Now let me show you clear examples of this.
Now this is Billy and this is Tom. Both of these traders have $300 to start their trading career. Now Tom decided to get a funded account with his $300, and with that amount he got a $100,000 funded account. And as for Tom, he's just trading with $300. And when Billy and Tom trade, they make different amounts.
This is because Tom obviously has more capital. And the funny thing about it is that even though Tom and Billy take the exact same trade, Tom will obviously be making more money. Now all this is possible due to funded trader market,
because funded trader market, or FTM, gives you the extra capital to make this trading journey profitable. Now no matter where you are in the world, you don't need to worry, because FTM is available in 140 plus countries.
This means no matter where you are, you can obviously get higher funding.
Now something that has not been seen anywhere is their on-demand payouts.
This means you can trade now, make a profit, request a payout from FTM, and you'll be credited in 24 hours. And they even went all out to provide traders with the trading platforms that they're familiar with. So if you want MT5, it's there, and if you want C Trader, it's also there. Even Trade Locker, you name it, they have it.
So click the link in the description of this video to get yourself funded.
Now I'm already trading a funded account from FTM, which you can watch the first video right here, and the second video is about to come up very soon, so subscribe so you don't miss out.
Now this next one is the reason why you can end up profitable or not, and that is actually risk management.
Now risk management can be viewed in 2 ways, either by lot size or manually setting your trades. Now in no way is it possible to sustain trading with a high lot size. Simply, you can make a lot of money in one trade, but if one trade there goes wrong, all of your trading balance and all of your trading history is gone. And obviously, we're not going to be winning every single trade that we take. So it's a matter of time before your account gets blown. Now, in setting your risk management manually, you can't just invent take profits. Take profits has to be at where support and resistance is. And if you see that the amount that you're risking is much more than the amount you're about to gain, it's not best to take that trade. So it pays in the long run to trade conservatively and work with support and resistance.